Is your trading account getting killed because you're an impulsive, compulsive trader? Today, we're going to help you fix that with 4 easy steps. Let's dive into this week's session. Okay, let's take a look at what's going on with the indexes right now. So let's blow this up and take a look at it. Starting with the S&P as represented by the spiders. Okay, all the spiders for the last, 5 days, we've bounced up, broke out, but then stalled out. What am I seeing here on the charts is that our momentum is just hanging out. It's not really going up, not really going down. I think the big reason for this is that the Fed happens next week. And so far, the earnings reports that we've been seeing coming out have been mixed. And so what am I looking for? Until the Fed meets on Wednesday, we may get absolutely no traction with the indexes whatsoever. Next up is the Russell. Looked like it was going to go in a little bit of a tear this week, and then just basically went sideways for almost 5 days in a row. The good things about the Russell are these. One, we are above, price action is above the moving averages, the 8, the 20, the 50, and so on and so forth. Needs to break out of this downtrend though. So if we break out from that, look out for getting up to the 2. Over on the weekly charts, as you can see, we had a really nice hammer from last week and a nice follow through week for this week. The thing that is of interest though, is the longer term momentum on the weekly chart. Looks like it's getting a little bit stressed also on the market forecast. Notice we have broken back down below the 80 line. The last time that happened, the Russell went into a more significant pullback. And so I'm still liking it as long as we stay above the 200-day moving average on the Russell. Now, you're going to want to hang with us as we approach the stocks we're going to be taking a look at this week are just absolutely outstanding, especially the very last one is going to be amazing. Really big opportunities you don't want to miss out on the QQQ. Okay, QQQ. You can see the weight. Basically a doji, which means the week it went nowhere. And basically no traction whatsoever. So we broke out a couple of weeks ago from this congestion zone. And now as we've proceeded to go up, look what's going on here. We've got a negative divergence going on the weekly chart on the TSI. The TSI on the daily chart has rolled over. And so wouldn't be surprised to see the NASDAQ continue to push down before the Fed meeting. And remember, we're going to have a tsunami of earnings coming out this week also. Here's where we're sitting as of the close of business today on 26. As you can see, Autopilot trading, we're up 5.29%. That is, again, beating the S&P and actually above the NASDAQ this year so far, year to date. If you want to find out what we're doing with the Autopilot trading system and service, I'll leave a link down in the description. Take a look. I think you'll be impressed with what we have to offer. If you find yourself being an impulsive or compulsive trader and emotions are ruining your trades, there's 4 things you can do to help with that. 1, develop and stick to a trading plan. Creating a comprehensive trading plan is crucial. This plan should include clear entry and exit strategies, risk management rules, and specific criteria for choosing trades. Adhering strictly to this plan and it significantly reduces impulsive decisions as it provides guidelines irrespective of your emotional status. To implement strict risk management protocols, establishing and following strict risk management rules can curb emotional trader. What's the big thing on this? Learn how to use stop losses. Keep you out of so much trouble. Trust me on this. Second, use a trade journal. Keeping a detailed trade journal encourages reflection and analysis. And I encourage you, yes, evaluate what you maybe have done wrong with a trade, but more importantly, also highlight and focus on what you did right to try to get that ingrained into your muscle memory. Finally, practice mindfulness and stress reduction. One of the breathing techniques that the Navy SEALs would use was called box breathing, where you would breathe in for a 4 count, hold it for a 4 count, and then breathe out. You do that about, oh gosh, 4, 5, 6 times. It will really reduce the stress level, especially when every fiber in your body is trying to make a decision to jump into a trade. And that can make it really ugly if that's an emotional decision. Let's go ahead and jump over here and take a hard look at the stocks. We're going to start with AXON. AXON. A little bit of a bonus with today's entities. Full disclosure, AXON, we did open a position with the Autopilot training this past week. Later on in the week, it's got a nice pullback back into a level of support, as we see here. May fall down just a little bit more from where it's currently at. We've got earnings coming up on the 27th, so we're about a month away from earnings. So they have plenty of time, but a nice little flag back down to support. I don't know if I would buy right now. I would wait for a breakout of that flag or a retracement all the way down. And listen, may retrace just a little bit more. And so we jumped on AXON this week. Strong, one of the top stocks in our watch list. ZS, we've got a small position in ZS, and I would like to add to it. It has earnings coming up on the 29th after the market's closed. Look for a pullback into that uptrend line or the 20-day moving average. So about the 230.58 level to about 224. That would be an excellent place to look at getting into ZS. As you can see, the market forecast has given us a 2-line cluster, and normally on a 2-line cluster, we turn back around and bounces back to the upside within 1 to 4 trading periods after the signal has happened. And if you wonder why we're sounding a little bit differently than we normally do, folks, I'm on the road. I'm in Modesto, California right now, and so I don't have all my equipment with me to be able to chat through everything. Here is my leverage ETF trade for next week, and it's on LABD. LABD is the leverage inverse ETF for the biotechs. And the reason I'm looking at this is because take a look at XBI, and XBI is like very toppy and put in a top and basically keeping rolled back up, a little bit of a rally attempt, and then is failing and is starting to drop back below the 20-day moving average. Looking over here on the weekly chart, similar type situation where this is looking very toppy. Sellers came in. And so where am I looking at potentially? If I get any kind of a drop below that 20 or below the 50, I would like to be in this to the downside. I think it has an opportunity to get down to about $74, $75. But that said, then the LABD is the inverse of that. And as XBI goes down, LABD should be going up. And again, look for a pullback 950 to 944, 940, somewhere on there. And as you can see on the weekly chart, this is what I'm primarily going to. It looks like it's priming to move back up. So I would put an alert in about 950 and then look for a buy somewhere about 930. If we drop below the low of this week, I would go ahead and exit the trade. So I'm glad you're on around for the very last. I know that crypto is starting to come back. Coinbase is doing exceptionally well. Got a really nice weekly flag going on here in the crypto range. This is a good opportunity here on Coinbase. Again, it's pulled back and we're getting a nice little flag. Let's see if it turns around. We had a 3-line cluster on Thursday. Nice little reversal here. It has dropped the moving averages. And so watch this as just a straight flag. I'll just draw a line right there. And so that's one. But the real entity I want you to be aware of, okay, go back here to October. This ran up about 160%. Not bad, right? Here's its Marathon Digital Holdings. Also doing a similar type move down to the downside. Nice flag on a weekly basis. We have a reversal signal, a piercing line on the weekly chart, but look how far it ran during that same time period. That's right, 270+%. Again, Mara as a good opportunity to move a lot higher. If you found today's session rewarding, if you're looking to improve your trading, check out the playlist that's going to pop up here shortly. And also, if you're a big Tesla fan, I just laid a new video. Check out where I think Tesla's going. I think it will surprise you. Go to the thumbnail that pops up on the screen. Folks, all the materials presented are for trading purposes. Traders should always pay for trading and not to apply the risk of their own personal capital. Past performance is not an indication of and or promise of future performance.